welcome. I'm excited to get started with our topic, auto loans. You have the perfect auto picked out, right? Car, truck, you name it. You are ready to wheel and deal the best price. And then you think, man, I also have to get that good loan rate to make it all worth it. That fun purchase can start to feel a little exhausting, but it doesn't have to be. And we here at ValleyStar are all about helping you navigate that loan space. I'm Becky Freemall here at ValleyStar Credit Union, and joining me today is Mitch Smith, Senior Lending Officer at ValleyStar. Thanks for joining us, Mitch.
Thank you for having me. As Becky said, my name's Mitch Smith. I'm the Senior Lending Officer here at ValleyStar. I've been with the company 27 years, most of it in lending. So I've done my share of auto loans, and I should be able to give some pretty good information on the subject to help you out when it's time to buy a car. And I have some good tips for you, I think. So thanks for having me this morning.
Absolutely, no pressure, but I'm expecting to learn lots of things from you, Mitch. 27 years, that's a lot of experience that I don't have in the auto lending world. That's why I'm asking the questions and you're the one answering them. Let's dive right into it. So auto loans, buying that car or again, a truck, whatever it is, it's a big expense and it's important. Your finances are important. You want to make sure you make the right decision. All the options on how to finance can be overwhelming, especially if you're a first-time buyer with all of this, but even if you've done it a few times. And oftentimes it's easier to kind of break it down and look at something one step at a time. So with your expertise, please share what you would say would be that first step that someone should make.
That's a great question because some people get the cart in front of the horse, if you don't mind me saying. Many of times I have did a car loan for one of our members, and 3 months later, they came back to me and the car wasn't big enough, or they didn't realize how bad it was on gas. So they've already got their loan, they've signed their papers, they've been driving the car for a week or two, and they realized maybe they didn't get the right car. Yeah. So the first thing I would do is do the research on the type of car you need. Are you looking for room? Are you looking for power? Are you looking for all-wheel drive? Are you looking for gas mileage? And then once you decide that, then you can start actually picking out the car. But you always want to make sure once you've went through the process, because sometimes it's a hassle. You don't want to have to do it a second time. I've had to do that many times. They drove the car 2 or 3 months and they're ready to trade it in already because they weren't really happy with their purchase. So the first thing I would say is get in your mind what you know you want in a car. Obviously, we're not just talking about color and things like that. Is it going to suit you functionally? Is it going to cover all of your needs? So at that point, you would know what car you want. There's so much information on the internet and web, and obviously we at ValleyStar would be willing to help with this too. The next thing you want to do is, once you've decided on the car, you want to kind of get an idea of what the book value is. How do you know if you're getting a good price on the car when you do not know what it's worth? Now, on a brand new car, that's simple. It's right there on the sticker that's on the window. It lists all the options, and at the bottom line, it'll say the manufacturer's suggested retail price. Well, that's what it is. So new cars are easy. You can go to the lot and you can see it right there on the window. On used cars, you can look it up yourself online through a website called the NADA. But if it was me and I had a relationship with someone at a financial institution, hopefully ours, make a phone call and ask your loan person or any staff member, I'm in the market for a car. I've kind of got an eye on this 2018 Honda Accord, and I would like to know what the book value is. Okay. So once we tell you, say it's $21,000, if you walk in on the dealership lot and they say, well, yeah, we can put you in that today for 25, then, all the bells and whistles are going to go off. So my first step in the car buying process is I would do my homework on what I need. You know, do I need a big cargo area for all my kids' soccer stuff and volleyball stuff, or am I looking for a car to get me back and forth to work without tearing up my wallet with gas prices? So know what you want, and then find out what it's worth. And at that point, you know, that's pretty much the first step, and you would be ready to move on.
And then you can have fun. And if you want to color shop after that, color shop away.
That's correct.
Let's dive into, and I don't think people necessarily have this in the back of their mind or even in the front of their mind when they're car shopping, but you know, you do hear a lot about secured loans and unsecured loans. And is an auto loan secured or is it unsecured? And what does that mean to me as I'm going out and looking for a car and a loan?
Sure. A car loan is a secured loan. And the reason being is your financer is going to put a lien on that title until you get that debt paid off. And as far as that goes, that's going to be any type of loan with collateral, boat loans, mortgage loans. Obviously, when you buy a house, the bank that finances your house for you, they're going to have a lien on that deed of trust. If, you know, and the same thing on a car or boat. What that means to the consumer is, and basically an easy explanation of secured versus unsecured is, a secured loan, if you don't make your payment, you lose whatever it is you were financing. Okay,
Makes
so
sense.
we get a car, we go buy a car. ValleyStar does my financing. The dealership and the DMV know who did the financing, and there will be a lien in favor of ValleyStar on your auto title. That being said, I go 120 days and I didn't make a payment, then sometimes when I least expect it, there's going to be a guy with a tow truck that pulls up in front of my house and hooks to my new car, and he drives away with it. Okay. Unsecured, the only thing that the lender has as your promise to pay is your word and your signature on that contract. There's no collateral. There's no liens on anything. If you don't pay, other than the damage that it does to your credit file, the bank or financial institution just loses the money. So on a secured loan, that's why you normally on an auto loan or any loan that is secured by a piece of collateral, you're going to get a better interest rate than you are on an unsecured loan, because your lender knows if he doesn't pay for the car, we're going to repossess it and we're going to sell it, and we're going to take that money and pay it on our loan to where we don't lose as much. On an unsecured loan, if you don't pay, there's nothing to repossess and nothing to sell. So every bit of the money that gets defaulted on is just lost for the creditor. So for the consumer, that just means on an unsecured loan, the damage, you do have damage and it's done to your credit report, which could cost you down the road. But on a secured loan, if you default, you lose the property that secures that loan, whether it be a house, a boat, a car. You know, car expenses are big. It's kind of hard to walk into your loan officer and say, hey, I need $35,000, and him do that without having some collateral. It's hard to get a signature loan for $35,000 because the bank knows if you don't pay, they've lost $35,000.
Gotcha.
If it's a car loan, we at least could get our hands on the car and sell it. So that's the biggest difference between secured and unsecured. One is covered by collateral and you normally get a cheaper rate. You also get a little bit longer time to pay it back. They will allow it because the loan is so big. An unsecured loan, the rate's going to be higher because to the creditor, it's more risky. If you don't pay, they get nothing. So it's a little more risky. You're going to get an interest rate that's a little higher, and you're probably not going to be able to get as long a term because they want to get that money back as fast as they can.
So auto loan, excuse me, auto loan equals secured loan, which then in turn equals potentially a lower rate if you have a good credit score. If you're out to get the auto loan, what do you need to do when it comes to shopping around for the car, but now you need to shop around for the best rate? How do you get that best auto loan rate?
there's no substitute for having a relationship with someone at a financial institution, because you can go in and speak to them. They want your business, so they're going to be honest with you, and they're going to make quotes to you based on what their board of directors say their rates are. But again, it's just like shopping for a car. Every financial institution has a website. So just like I mentioned, do your homework and shop, make sure you're shopping for the right car. You want to call several, I would call several creditors and check and see what their rates are. Now, that gets a little less specific, because then we'll talk about this later in the podcast about credit score. Nobody, until they pull your credit, can tell you exactly what your rate's going to be. We're going to talk later about how your credit score influences your interest rate, but they will give you a range. And if you said, well, the last time my credit was pulled, my number was this, they can say, well, if that stays the same, then here's your rate. But shop around, check multiple creditors, and if you have somebody that you've dealt with from time to time, give them a call and they will tell you about the range of your rate. You don't want to just take the word, you just don't want to go online and see. You kind of want to talk to somebody. Also, at financial institutions, some financial institutions offer discounts. Let's say your rate might be 3% on an auto loan, but if you have direct deposit with us and your paycheck is directly deposited to our institution, we'll knock a half a point off of that 3% because you'll do other business with us. Inquire about incentives. Inquire about, are any banks or any dealers having any promotions at the time. You see on TV all the time, Toyota Motor Credit, 0%, 60 months. Check around for promotions, but check multiple sources, check multiple financial institutions, and then you will be able to make your decision that way.
So this is a loaded question, because someone could be listening to this now as we're recording it in January of 2021 or 22, 2022, whatever year it is, or they could be listening to this 5 years down the line. So this could change, but for now, what is considered a good auto rate? And kind of in line with what you just said, if you walk off with an unsecured loan and you don't pay it back, your auto rate isn't going to be so hot because your credit will have tanked. So I guess it's kind of a loaded question in all rounds. What is a good auto rate and all the aspects that impact that?
Right. And that's a good question. And just like the stock market, from time to time, rates change. So a good rate today may not be a good rate a year from now, or not be as good as a rate from year to, all of your lenders and your financial institutions, they all want your business. So most rates are as close as they can be, because obviously if Bank A is charging 1% and Bank D is charging 5%, Bank D is not going to have many customers because they're charging 4% more than the other. Right now, our interest rate, if I'm speaking for ValleyStar, for top tier credit, brand new car, you can get your rate as low as 3.49 without any of our incentives. We do have incentives here at ValleyStar for direct deposit, for if you elect to get an extended warranty on your car. That tells your creditor, hey, if it breaks down, he's not going to have to pay any out of pocket. It's going to be fixed automatically. We're going to give you another half a point for getting an extended warranty and such. So, but without any discounts or anything right now, we're offering 3.49. So I would say right now for top tier credit, if you were around 3.5% or less, you would be getting a pretty good interest rate.
Can you talk about that credit rate? And I think you might have been going on that when you said, obviously, if you have a lower credit score, it's not necessarily going to be as great, which maybe this is a teaching moment for some folks who maybe don't realize how important credit scores are.
Yes. And obviously when I say you're not, if you're not in the top tier, it really just depends on the score. And each lender, creditor, they're going to have certain tiers of rates based on what the score is. Our best tier is 740 and above. So if you have a 740 credit score or higher, you're going to get the best rate we offer anybody walking. Now, let's say you're under the 740, you're 730. Well, that's still a great credit score. It's not in our tip top tier, but it's still a good score. So instead of 3.5, you may pay, 4.25. It just creeps up a little bit as the scores come down. Easy to say then, the further you get from that top score, the higher your rate's going to be. And then if you get down in the bottom tiers, well, those creditors are considering you risky, obviously, because you've got to have a lower score. You're going to have some marks on your credit report that's not doing you any favors. As that gets down in the bottom tiers, those rates get expensive. And that's why it's so important, barring in family emergency, medical, or anything, to try to keep that credit straight, because it doesn't just affect you in lending money anymore. When you go to get homeowners insurance or car insurance, they pull that. Hey, how's this guy's credit? If your credit's perfect, they're figuring, well, he's going to pay his insurance payment too. So you get better deals on insurance, you get better rates on loans. And so that being said, also, the better your credit is, the less hoops you have to jump through when you go get a loan. If you've got 30 years worth of spotless credit, they may not even ask you for a pay stub or some other kind of qualifying documentation that they ask for people with lower tiers. So the better you keep your credit, number one, your interest rates are going to be cheaper. And trust me, people like me that lend money for a living, we love waiting on people like that. So I'm going to make it as easy as possible. I want them to come back to me next time because I know I'm getting paid. So that's the most important thing when it comes to rate, is trying to keep that credit score up.
Another question I have is just talking about how much I should save for a down payment on a car. And I'm going to load this question and give you two of them. And then when it comes to the length of time that you have to pay off a loan, you always hear 36. And I mean, we're up to 5 years, probably even more now. How long should I get a loan for? So two-part question, down payment question, and how long should I get the loan?
Okay, let's start with the down payment.
Okay.
Now, and I'm going to sound like a broken record talking about credit score and credit, and I apologize, but the better your credit, the more your lender is going to lend you versus the book value of the car. So if you're in that top tier credit wise, you may not be required to put any down at all. But now at that point, it kind of ties into how much do you want your payment to be. If you shop payment, which that's another thing, when you go in to check your rate, if you've already picked out your car and you know a ballpark figure of how much you're going to be financing, you ask your ValleyStar employee, if I borrow $35,000, what would my payment be? And they're going to tell you, and then you can do the math in your head to make sure you can afford it. Well, if the payment on $35,000 sounds a little high, but you really want that car and you have money to put down, then you still could get this $35,000 car. And if you put $3,000 down, you only are borrowing $32,000. So your payment's going to come down. And usually it ballparks out at about $20 per thousand. For every $1,000 you put down, it's going to subtract about $20 off of your payment. Now, on the other side, the downside, the weaker your credit, the less the lender is going to lend you versus the book of the car. So if the value of the car is 25, they may not want to go all the way up to that for fear if we do have to repossess it and sell it, you're never going to get full retail at an auction when you're selling cars. So the creditor may say, look, you got some things hitting your credit report. They don't scare me to death. I'm willing to do a car loan for you, but you need 30 and I'm only going to be able to lend you 27. That makes my payment affordable for you. And that gives us a little equity in the car. On a mortgage, it doesn't really matter what your credit is. They want at least 20% down. They most of the time do 80% of the appraised value, or they make you get PMI insurance to cover up to 95. That's if house values fall and they foreclose on you. They want to be able to get their money back. So the down payment is directly related to how much you want your payment to be. In other words, the more you put down, then you're stuck with a less monthly obligation. You've lowered your payment because you put money down. The other side of it is you could be required to put money down if you've got some nicks in your credit report. And most of the time, I shouldn't call it nicks. Most of the time, if your credit's in a position where people are requiring money down, you have more than some nicks. You've got some pretty serious delinquency showing. So basically that part's just a matter of math. And another reason why it's so important to keep that credit score great. It's nice to go in and get approved and you say, well, how much do I have to put down? And they say, no, you don't have to put any down. That doesn't mean you shouldn't, like I said, or you may still want to keep your amount financed down and your payment down. But there's really, that really boils down to how much you want your payment to be and what kind of credit you have.
And does that kind of bleed into that next question of how long you hold on to the loan? Because obviously if you get a 5-year loan, it's going to be a lower payment, but you have probably more interest.
Well, that's correct. Now our interest rates, just like this 3.49 I quoted earlier, top tier credit, that's up to 60 months. The longer you run your loan, your rate ticks up a little bit, obviously, because the loan's going to be on the books longer. It's going to take longer for the bank to get their principal money back. But that's a minute jump too. That may be a quarter of a point. You can go 60 months at this rate, and you can go 72 months, which is another year, and they're going to charge you a half a point higher. So most of the times the rate doesn't jump up a huge amount just for stretching the term. The most important thing I can say is when someone's buying a car, make sure you can afford the payment. And the reason I say that is some people, maybe they mess up on their math. You could have spotless credit and be the most honest person in the world. But if you don't have the money because of other bills to make the payment, you can't make it even if you want to. So it's not that you're a bad person or you don't ever pay your bills. You messed up on your math a little bit and this payment's a little tighter than you thought it was going to be. So for me, if the interest rate was not a big jump, I may say if I only wanted to go 60 months, I may run it 72 months and then I'll pay a little extra on it from time to time because the payment's lower and there's no penalty for that at most institutions. So I may even end up paying it off in 60 months, but I'm only contracted to a 72-month payment, which gives me a smaller payment. If I have an unexpected bill, I could drop down and pay that lower payment a month or two, get all my obligations met, haven't hurt my credit score. And people go, plenty of months on a car loan now. The credit union will go up to 84. So that'll tell you how long from we'll finance cars now. It used to not be that long. We used to do 60 months. Now you can go up to 7 years. That's 7 years to pay off a car. Wow. So that may, a lot of that's personal preference. Mm-hmm. But for me, I would much rather run it longer and pay it off early than to try to run it a less amount of time for the best rate. And then it's tight every month. And one thing I would like to add too, when you're shopping for a car and you're trying to figure out your budget, call your insurance guy too, because you don't know how much your insurance is going to go up. I have had before very young kids or very young borrowers come in to see me, 20 years old, want to buy a V8 Mustang GT. He looked fine. I probably could have done the loan for him, but I've done it a while and I've ran into it before. I asked him, I said, well, before we sign these papers, I would like for you to call your insurance agent and ask him how much full coverage insurance is going to be on this V8 GT Mustang for you. And several times I've had a call and they said, Mitch, I sure am glad you told me that, because on top of that insurance, I can't afford that payment. I've got to get another car because insurance is high for a 20-year-old on a car that'll run 200 miles an hour. So check check your insurance too, along with your budgeting for your car. That way you don't have any sudden surprises when your bills start coming in.
Yeah, and it kind of just to circle back to where we started, it sounds like it's just all about doing your homework. And it doesn't have to be intimidating. It's just kind of sit down and just take that extra moment to think of the people and the calls you need to make, your loan officer, what kind of car you want, shop around the dealership. So what do we got? Insurance, financial institution, car dealership. Those
You
are the
know,
three.
that being said, too, a lot of it can be done at home in front of a computer. Every
Yep.
financial institution has a website. Every car dealer has a website. Um, get multiple prices on a car. You see a car you like at dealer A, and he just quotes you a price. Well, how do you know that the dealer down the street or across the way doesn't have the same car and it could be a little bit cheaper? So check multiple dealers, check multiple financial institutions. I hope they all end up back with ValleyStar because we're going to treat them so good. But yeah, check other places. Just come on back to us when the time comes. But checking around, doing your homework, and you can do most of it without making phone calls. A lot of people get nervous. They don't really want to. They're afraid they're going to ask a dumb question, which there's no such thing. That's what your lending people and your folks at your financial institution is there for. So you can do a lot of your homework online. And then if that you need other info, you can go by and call or go by and sit with your financial institution, and they'll take all the time that you need. They'll quote you payments, quote you interest rates. You'll know everything you need to know before you go sign those papers.
Perfect. Mitch Smith, Senior Lending Officer here at ValleyStar Credit Union. And again, I'm Becky Freemall. Thank you all for spending time with us. I am constantly amazed, legit, at the financial knowledge that surrounds me here at ValleyStar. And Mitch, thanks so much for taking the time to throw some of those loan tips our way.
Thank you for having me. I enjoyed doing it.
It was fun. And I told you, I pressed you at the beginning, so I better learn a few things, and I have. So I hope the rest of you all listening also learned a few things. And keep in mind, if you have any questions or you have an idea for a future financial education podcast, let us know. Just email us at learn@valleystar.org. If you prefer to dig around yourself, you can find plenty of information on our website, valleystar.org, where we speak your language.